A real estate investment trust up 35% this year. What's driving their success? Let's dive in. Today, we're excited to have Dave Holeman joining us. Dave is the CEO of Whitestone REIT. Dave, thank you so much for the time today.
Well, it's a pleasure to be with you and look forward to speaking.
Well, let's start off the conversation today with what sets Whitestone REIT apart from other commercial real estate companies across the country.
So we are a community-centered real estate investment trust. We value very much the neighborhood. So we put our properties in great neighborhoods, and we're a REIT. So we're a vehicle that allows investors to invest in real estate without having to go through all the trouble of buying and financing and operating the properties. We're located in the Sunbelt. So 100% of our properties are in the Sunbelt in Texas and Arizona. And we're in the fastest growing markets in those states. We're in Dallas, Houston, San Antonio, Austin, and then we're also in the Phoenix market. Our centers tend to be more convenience focused. So we have really leaned into the driver of convenience being a large factor in consumer buying. And then we specialize in higher demand, smaller spaces. From a company perspective, we're traded on the NYSE. Our ticker is WSR, about a $750 million market cap company. We are one of the few public companies that pays a monthly dividend. So we pay investors a monthly dividend, allowing them the opportunity, obviously, to have income and participate in our growth. And then very proud of our performance. If you look at Whitestone over the last year, our shareholder return is over 35%. And then really since I stepped into the CEO role back in January of 22, we've produced a shareholder return of over 60%. And that really compares to the sector return of about 15%.
Very impressive growth story. We'll get back to some of the stock numbers in a little bit. I want to talk a little bit more about some of your properties and the history of your company. How long has Whitestone been around? And are you developing some of these properties new yourself, or are you taking over existing properties already?
Yeah, glad to share a little bit about our history. I joined the company back in 2006 and was the chief financial officer for a number of years. At that time, it was a very small company that owned assets largely in Houston, and really had all retail shareholders and no institutional ownership. At that time, we internalized our management team, and we adopted a strategy that really, took a look at the changing retail environment. Obviously, e-commerce was growing. There was a lot of thought about retail bricks and mortar being dead, and we really leaned into the space of services and convenience and the kinds of things that you couldn't buy on the internet. Over the next 10 years, we bought great properties in growing markets. We expanded our geographic footprint. As I mentioned, some of our markets we're in. And then we've also strengthened our investor base. 2020, which seems like a bunch of years ago, obviously was the pandemic and was a big kind of rocked the world for all of us. But really the strength of Whitestone's portfolio stood out during that time as we had some of the best performance in the sector. And then recently, our history with, as I mentioned, I stepped into the CEO role in early 2022. So we've really been laser focused on really strong corporate governance, operational and financial performance. For us, it's a matter of doing what we say we're going to do. We've been focused on that. And then disciplined capital allocation. We've also spent a lot of time making sure we have the right team members in place. We have goals and accountability. And then tenant selection. We'll talk about what we do a little bit, but really understanding the consumer, I think, is incredibly important, and no matter what business you're in. And so we focused on making sure that we understand the neighborhoods, have the right businesses in place, and really support the community. We're not a ground up developer. We historically buy properties where we can find a property that we can come in and apply our operational and strategy to and add value. So with that, we do some amount of development in the existing properties, but we're not a ground up developer. We look for assets in great markets that we can add value to.
One thing that you say sets your company apart too is working directly with your tenants. What does that look like from, the real estate owner and tenant partnership?
Very fundamental to everything we do. I mentioned our performance in the pandemic, and I credit a lot of that to our close, strong, deep relationships with our tenants. Uh, we're a little smaller than some of the other big public REITs, and I think with that, we take a more hands-on approach. We're very, very active in using technology to understand the community, what the buying needs are, what the void analysis is, and we really lean into that and spend time with tenants. We have a team that regularly interacts with tenants, meets with them regularly, understands who their customers are. What can we as a landlord do to help their businesses? Who are complementary businesses that would help drive their business? So for us, being very involved with our tenants is crucial. And we actually structure that arrangement a little differently than some of the others. We have shorter lease terms, which we like because it keeps us in front of the tenants more often. It's important to have fresh centers with businesses that are performing well. And so we consider the strong tenant relationships one of the things that really sets Whitestone apart.
And your stock price is definitely showing the results of that strategy. Doing very, very well, as you said, up about 35% this year. What do you expect for growth in the future?
Yeah, so growth is something that we focus on every day. For us, it has a lot of different legs, right? You think about the existing portfolio we have today. If you look at our same store growth in our properties, it's among the best in the sector, and we credit that to the operational expertise of the team and our strategy. We've also got growth opportunities I mentioned in some development and redevelopment of our existing centers. So for us, we buy properties that sometimes have a little extra land where we can add a very valuable pad site. And we do that driven, 100% by demand. And then growth also for us will be acquisitions. If you look at over the last couple years, we've bought about $100 million in properties. We've financed that with doing some sales of properties, but we think there's going to be great opportunities for us in the markets we're in and similar markets to really expand our asset base over the coming years.
Yeah, how does the current state of the economy, discussions around interest rates impact your business going forward?
Yeah, it's the current environment is as strong as I've ever seen it in our sector. Obviously, the macro. I'm not an economist, so I won't get too far over my skis. But what we're seeing is we continue to see a healthy consumer. The data that's coming out supports that, and then more importantly, on the ground, we see our businesses doing well. In our sector, in the retail world, real estate is very different, right? And retail real estate is very different. I mentioned neighborhood centers. We focus on the neighborhood centers, which have seen the best performance in the retail group. But we're seeing a super strong supply environment. If you look back, really from 2000 to 2009, there was really very little new supply delivered into the markets for strip centers and retail centers. For the last decade, we've seen very little supply. So we're in an environmental time right now where we have strong demand. We're in markets that have great migration. I mentioned Texas and Arizona leading the country in new job growth and new migration. And then we also benefit from a supply environment that is super positive as well. And then interest rates, I think all of us have learned to operate with different interest rate levels. For us as a real estate operator, it's matching. We have shorter leases, so we have the ability to grow those lease rates in good times and to move them as interest rates change. We have a capital structure that has extended maturities. We ladder our maturities. We have lots of financial partners. So interest rates are something that I think we can work well with. We've worked well with the rising rates, and I think we all think there's going to be, it may take a little longer, but there's going to be an environment with a little lower interest rates coming, I believe.
For our retail investors out there, you've already mentioned a little bit about being really proud of the balance sheet and how your company is run. That's what a lot of our investors are interested in. What are some of the things about how your company operates that you're most proud of that you think investors would be interested to hear about?
One of the things we focused on is making sure that we have the kind of transparency that allows investors to see exactly what the drivers are in our business. With that, we've strengthened some of our governance. We recently brought on a couple new extremely experienced, strong board members that'll oversee the company. So I think that's a great benefit for all investors. And then from a balance sheet perspective, I mentioned our capital structure. We don't have complexity. We have largely unsecured debt. We have it well laddered, and then we'll continue to look for ways to fix those rates. About 90% of our debt is at fixed rates, and very little maturities coming over the next several years. So from a balance sheet perspective, since I've stepped into the CEO role, we've also focused on strengthening the balance sheet. We received an investment grade credit rating in late 22, and we've continued to have a lower debt leverage on our balance sheet, which I think shows the strength of our portfolio.
I think a lot of investors are happy to hear about the improvements and the focus on your balance sheet. How about the focus on the future? Anything else just to wrap up our conversation today that you're just excited about for the momentum for Whitestone?
Yeah, I think momentum is a word that I think I would use to describe where we are today. We have very positive momentum. If you look at, we talked a little bit about growth. Ultimately, we judge ourselves on growth. Are we growing our shareholder value? Our shareholders' earnings, and is their stock worth more than it was before? If you look at Whitestone's earnings growth for 2014, we expect it to be about 11% on a per share basis, which is very good. And I think the runway going forward is great. Our organic growth is super strong. Our team is good, and we're positioned in a great place in the market.
Wonderful. Well, Dave, thank you so much for sharing more about Whitestone REIT with our investors today. You can find more about this company and many others right on MarketBeat.com and stay on our channel for more information about other investments that might benefit your portfolio. Thanks for joining us. And as always, happy investing.